Time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, thank you for coming on today.
Happy to be here.
On Wall Street, the Dow down by about 1% on Friday, but futures are down almost 5% now. Korean shares today closing about 4% lower. Investors getting very nervous now. What's the story, Dr. Young?
Okay, well, the end of February has been brutal on most stock markets around the world, and especially the United States. So if you take a look at it from about February 19th, S&P lost about 12.2% of its value, Dow lost about 11.9%, and NASDAQ lost about 12.6% of its value. More interesting, though, is what's happening with the bond in the United States. Most of the bonds, from 3-month bond to even high as 30-year bonds, the yield is now below 1%. So this suggests two things. One is that the market expects the Fed to lower the interest rate and keep it low. But even more disturbing, the global financial market may now be starting to undergo flight to quality. So they would be drawing assets out from the stock market into the bond market and out from most global markets into the U.S. bonds or Japanese bonds. So this may signal a really bad week for global stock markets other than the United States, and probably Korean markets as well. So we've seen a massive sell-off by foreign investors in Korean stock market today, which was the major cause for the KOSPI and KOSDAQ losses that were mentioned in the last story.
Yeah, we also mentioned the restrictions that South Korea and Japan are putting on the entry of each other's nationals now. And according to the government, the restrictions placed on South Korea now include all of Korea's 10 biggest trading partners except for the U.S. So fair to say this affects much more than the exchanges of people, but goods and services too. So what's going to be the impact of this?
Okay, well, in virtually all countries, we're going to see the impact starting at the services industry, especially tourism and retail, shopping industries. And we're beginning to see that, I think, in the United States. Under these type of circumstances, you usually see both shocks on the demand side and the supply side. On the demand side, as we've seen in Korea, people are afraid to go out to shop, and major and minor events where there's a lot of people gathered, they're going to be canceled. So major events like South by Southwest Festival in the U.S., auto shows in Europe, as well as smaller events like weddings are being canceled in the United States. That's not going to affect Korea that much, since Korea does export that many services, but it will go on to the manufacturing side. We've seen that not only will the lack of demand hit manufacturing industries eventually, but lack of parts from China, from Korea, from Thailand can impact production in several other countries. And if the COVID virus spreads, we're probably going to see something like that happening in the United States and Korea more as well. So if COVID does go global, as we're starting to really get worried about, then the global growth rate will take a large hit. But there's one maybe false good news in here, which is that just at the beginning, where these type of epidemics start to hold, you may see a very short and very large increase in consumption as people start to hoard. And we seem to be looking at that in the semiconductor industry. Most people are predicting that if the COVID virus goes on, semiconductor prices will fall, and that will mean bad news for Korean industry. But for February, the semiconductor prices seem to have actually gone up. And most people are interpreting that as various companies which need semiconductors are hoarding up right now because they're afraid that semiconductors will be harder to get in the latter part of the year because of the COVID virus.
Indeed. Well, we've only got less than a minute left, but what numbers are coming out this week that we should be looking forward to?
Okay, the biggest number that we should be looking at is February employment numbers, whether the COVID virus has hit employment, and especially large component of the employment was over 65 jobs provided by the government. And since over 65 people are very vulnerable to COVID, whether they have been hit. And then on the foreign statistics, Chinese trade account, U.S. Consumer Price Index, and sales of 10-year government bond will give us an indication how badly people think U.S. will be hit.
All right, Professor Young. Short and to the point. Thank you very much. We'll have to leave it there for today.
Thank you.